Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. And today I'm going to be breaking down one of the biggest questions that people ask me almost on a weekly basis. Do you need an LLC to get funded, or can you still secure business financing and unlock tens of thousands of dollars even if you don't have a formal business structure? If you've been thinking about starting a business and you're planning to form an LLC, or maybe you're wondering if a sole proprietorship is enough, then this is the video you absolutely do not want to skip. Because here's the truth that most people never hear. The entity that you choose will directly influence how lenders view you. It's going to determine how much funding you qualify for and the strategy that you'll use to hit that first $50,000 in approvals. And yes, you can do it with an LLC, or you can do this with nothing more than a sole proprietorship. The path looks different, but the results can still be massively different. So before we dive in, remember, I'm not an attorney or a tax advisor. Everything in this video is for educational purposes only, and you should always consult with the appropriate professionals for legal or tax decisions, and this will play a factor in today's video. So what I can give you is my own personal real-world experiences, some detailed strategies, and step-by-step funding roadmaps that has worked not only for me, but for hundreds of people that have come across this community. And with that said, let's get right into the video. Let's begin with the simplest business structure available in the United States, and that's going to be a sole proprietorship. A sole proprietorship is the most straightforward type of business that you can operate. It isn't a separate legal entity, meaning the owner and the business are essentially the same. One person owns it, controls it, and is personally responsible for everything that happens. This structure is popular because it's incredibly easy to set up. It requires almost no formal paperwork and allows you to start operating immediately. Essentially, it happens automatically the moment you begin operating your own income producing activity under your personal social security number. If you start an online store today under your personal name, then congratulations, you are a sole proprietor. If you begin selling services, freelancing, mowing lawns, doing hair, flipping items, or any other income generating activity without forming an official entity, then you are also a sole proprietorship. There is no state filing, there is no corporate documentation, there is no annual requirements, there are no board meetings, bylaws, or operating agreements. And this simplicity is exactly why so many people start out this way. It takes zero money, zero steps, and you can literally earn income in the next 5 minutes, and you're considered an operating business. The biggest thing to keep in mind is that a sole proprietorship is tied directly to you. You are the business. Your personal credit, your personal assets, your personal tax return, and your own personal risk. All of it flows through you because there is no legal separation. And again, while no formal registration is required to exist as a sole proprietorship, you may need to take other steps to legally operate your business. For example, you can get a DBA, also known as a doing business as, and this is if you want to operate under a business name, but that does not create a separate entity. It simply registers the name you want to publicly operate under. Taxes for a sole proprietorship also stay on your personal returns, usually on Schedule C, which makes accounting straightforward and very fast. But while the simplicity can be a benefit, it also opens up the door to some very real risk. Here's where most people start to see the limits of operating as a sole proprietor. Because while this structure is easy to start, it comes with zero liability protection. If someone sues the business, they are suing you personally. There is no shield between your business and your personal finances. Creditors can come after your personal income, your personal savings, and your personal assets, and you are liable for every single debt the business takes on. If you make a mistake, you miss a payment, or you end up with a legal issue, there is no separation between you and the business. And this is where many new entrepreneurs find themselves in trouble without even realizing they're exposed. Another drawback is the funding side. Banks and lenders often consider sole proprietors as high risk. You can still get approved, and people do it every day. In fact, I have an entire video that shows you how to get approved for business credit cards as a sole prop. I'm going to link that video right here. But it often requires stronger personal credit and will always require personal guarantees because the lender knows there is no legal entity backing this operation. Investors also rarely put money into sole proprietorships because there is no equity structure, there's no membership units, and there is no legal protections. So while a sole proprietorship is a perfect starting point for many beginners, it does have limitations that show up as you grow. Now, let's move into the structure most people hear about on social media, the one that everyone claims you absolutely need, and that's the limited liability company, also known as an LLC. Now, an LLC is a formal business structure that you file with your state, unlike a sole proprietorship. This creates a legal separation between you and this entity. It's no longer just you. This is the business, and that separation is where the power of an LLC begins. The primary benefit is built into the name itself, limited liability. This means that if the business itself is sued, the business is responsible. Your personal home, your savings, and your assets are generally protected, assuming you maintain proper separation and do not commingle funds. With an LLC, you can still be the only owner, known as a single member LLC, and you still get full control just as if you were a sole proprietor. But you also get the credibility, the structure, and protection of a real business entity. Banks, lenders, vendors, partners, and investors take LLCs more seriously because they know the company is legally recognized. Another major advantage is tax flexibility. Unlike a sole proprietorship, an LLC has optional tax classifications. By default, it's taxed like a sole proprietorship or a partnership with income flowing through to your personal return. But you can elect to be taxed as an S corporation or even a C corporation, which opens doors for tax planning, payroll strategies, and potentially significant savings depending on your income level. You'll also gain more flexibility in how you structure the company and how you bring in partners and how you manage the operation, but this does not mean that an LLC is perfect. On a side note, if you do have questions about how to set up your LLC as a corporation, while again, I'm not a tax advisor, I do have a video that talks about payroll strategies if you want to pay yourself as an S corporation. I'm going to link that video here as well. It shows you how to create your own paycheck stubs with your company. Where a sole proprietor costs $0 to start, an LLC requires formation filings, annual renewals in many states, and more responsibility. You need a registered agent. You need an operating agreement, and you need proper bookkeeping. You need a separate business bank account, and as of 2024, thanks to the Corporate Transparency Act, LLCs must submit a beneficial ownership information report to the Treasury's Financial Crimes Enforcement Network. While this reporting requirement is simple, failing to file it can lead to large penalties. Sole proprietors don't need to file this report at all, which is why many beginners start with a sole proprietorship before later transitioning into an LLC. LLCs require structure, organization, and more formality. If you don't maintain separation between personal and business finances, courts can pierce the corporate veil, meaning they treat you and the business as the same. And this can erase the very liability protection that you formed the LLC for in the first place. So while an LLC offers credibility, tax options, and legal protection, it also demands more discipline and administrative work. If you want to learn how to incorporate your LLC the right way and have a structured business from day one, I have an entire video that walks you through this process. All right, so finally, we can get to the real reason why most of you probably clicked on this video, and that's going to be business funding. So how do these two structures compare when it comes to unlocking business credit and securing $50,000 or more in approvals? Well, here's the truth that most people overlook. Both structures can qualify for business funding. The difference is how lenders evaluate your application and what type of funding is available. Now, a sole proprietorship relies almost entirely on your personal profile. Lenders look at you because there is no legal entity to underwrite. This means you need good personal credit, strong payment history, low utilization, and a clean report. If your personal profile is solid, you can get approvals from banks, credit unions, and fintech lenders, even without an LLC. But the ceiling is lower. Sole proprietors tend to get smaller credit lines. Some banks limit credit exposure because they don't want to take on the risk of a business with no legal separation. Now, when you compare that to an LLC opens you up to an entirely different category of lenders, and you can build business credit under your entity's EIN number. You can also apply for vendor accounts, net 30 lines, gas cards, fleet cards, store lines, fintech credit, and eventually real revolving business credit that reports to business bureaus like Experian Business, Equifax Business, and Dun & Bradstreet. As your business credit profile grows, banks start approving much larger limits, often without relying heavily on your personal credit. Now, this is where you begin to see $20,000 approvals, $30,000 approvals, and even $50,000 approvals across multiple accounts, and it all begins with the structure of your business. Now, if you want to learn how to structure your business, I just released a new video for the end of 2025 going into 2026. You can watch this video here. I'm also going to be doing a brand new updated version for 2026 that will have some brand new information that I can't wait to share with you. So now the question is, which structure is better for unlocking $50,000 in business funding? Well, the answer depends entirely on your goals, your credit profile, and the urgency of your timeline. If you have strong personal credit and you need fast funding, a sole proprietorship can get you there quickly. You can apply for business credit cards that rely solely on your personal credit score. Many lenders do not require an LLC for sole proprietors, and this is perfect for freelancers, early stage entrepreneurs, and anyone looking to get started immediately. But if you're serious about scaling and building long-term funding access and separating personal from business liability, then an LLC becomes the clear choice. It gives you the ability to build credit under your business, leverage tax advantages, attract partners, and grow without hitting the limitations of a sole proprietorship. Your risk tolerance does matter. If you want liability protection from day one, an LLC is worth every single penny. If your business involves physical risk, clients, contracts, equipments, or potential disputes, an LLC helps shield you from the unexpected. When it's all said and done, your future goals matter too. If you want to attract investors, if you want partners, or you want employees, then an LLC will be essential. If you want to eventually apply for larger credit lines, working capital loans, and even bank loans that require an entity, then an LLC gives you that path. So in the end, both structures can work, both can get funded, but the experience and possibilities are not equal. One of the most overlooked strategies is starting as a sole proprietorship and then forming an LLC later when the timing feels right. Now, this allows you to get into motion today without needing to wait for paperwork or estate filings. You can test your ideas, you can build early income, you can learn your market, and then you can take time developing your business concept. When you're ready and you want the credibility and protection of an LLC, then you can transition the business into that structure. Many successful entrepreneurs begin exactly this way. Starting simple creates movement, and then switching later creates structure. You get the best of both worlds. So by now, you should have a clear picture of how both structures operate and what they mean for your funding journey. A sole proprietor offers simplicity, speed, and the ability to begin operating instantly, while an LLC offers structure, protection, and long-term scalability. No two businesses are the same, no two funding paths are identical, and your choice should reflect your credit profile, your risk tolerance, and your growth goals, and how seriously you want lenders to take you. So if you want to unlock $50,000 in business funding with or without a formal business structure, both paths are possible. But if you want sustainable growth, long-term protection, and access to higher limit lenders, the LLC creates a stronger foundation for everything you will build going forward. Now, I do have a video about 9 banks that will approve a new LLC $50,000 without proof of income. I'm going to link that video right here. If you want to start right now, this is the best video that will show you a list of potential banks that you can apply for. And again, I have an entirely separate video that shows you how to get business credit as a sole proprietor, and you can watch that video as well. Either way, each one will give you the ability to get started today. I want to thank you guys so much for watching this video. Now, if you want to learn exactly how people are unlocking $50,000, $100,000, maybe even $500,000 in funding as a brand new LLC with zero revenue, then make sure that you subscribe for more strategies, deeper breakdowns, and the newest credit building methods. And I'll see you in the next video. As always, thank you so much for watching, and you guys have a wonderful day.